The Internal Revenue Service has just dropped a bombshell announcement that's set to directly impact millions of American seniors and disabled citizens. A $6,400 double stimulus payment is officially confirmed to hit bank accounts this weekend. For Social Security recipients, SSDI beneficiaries, and retirees who've been grappling with rising costs of medication, utilities, and groceries, this news couldn't come at a more critical time. The IRS has clarified that this isn't a rumor or a speculative proposal. It's a concrete plan already in motion, with the first wave of payments scheduled to arrive as early as Saturday morning. But what exactly does this mean for you? How do these payments work, and who qualifies to receive them? Let's break it all down. This unprecedented dual payment structure marks a significant departure from previous stimulus initiatives. Unlike the single lump sum payments distributed during the pandemic, this program involves two separate deposits totaling a $6,400, a $3,200 check, followed by another $3,200 payment specifically designed to help seniors and disabled Americans offset inflation-driven price hikes. The IRS has tied eligibility directly to existing Social Security and SSDI enrollment, meaning if you're currently receiving benefits, you're likely already in the system to receive these funds. However, there's a crucial caveat. Recipients must have filed their 2023 tax returns to remain compliant with IRS requirements. This detail has caused some confusion, as many seniors don't typically file taxes due to limited income streams. The agency has rushed to clarify that even those with non-taxable Social Security benefits still need to submit a basic return to qualify, creating a narrow window for last-minute filers to meet the deadline. Payment distribution will follow the same schedule as regular Social Security deposits, with recipients who receive their benefits via direct deposit likely seeing funds appear first. For those who rely on paper checks or prepaid debit cards, delays of 3-5 business days are expected due to mail processing times. The IRS has partnered with the Treasury Department to prioritize electronic transfers, citing security concerns and faster delivery speeds. This weekend's initial payout will specifically target beneficiaries in states with the highest senior poverty rates, including West Virginia, Louisiana, and Mississippi, though all eligible Americans nationwide will receive their payments by mid-September. The timing of this announcement has raised eyebrows among policy analysts. Coming just weeks before midterm elections, some critics argue the stimulus serves as political leverage, while advocates for seniors' rights applaud it as long overdue relief. What's undeniable is the immediate financial impact. A married couple receiving dual Social Security benefits could see their household income temporarily boosted by $12,800. For many, this represents nearly half their annual benefit amount arriving in a single month. Financial planners are urging recipients to allocate these funds, strategically prioritizing high-interest debt, medical bills, or emergency savings rather than discretionary spending. But there's a catch that's left many seniors anxious: strict income thresholds. Individuals earning more than $75,000 annually, or $150,000 for joint filers, will see their stimulus amounts reduced by 5 for every 100 over the limit, phasing out completely at $80,000 for singles and $160,000 for couples. These figures apply to adjusted gross income from 2023 tax returns, creating potential complications for retirees with fluctuating investment income or part-time employment. The IRS has set up a dedicated hotline to address questions about eligibility cliffs, but wait times have already stretched to over 2 hours as millions scramble for clarification. Fraud concerns loom large in the wake of this announcement. The Federal Trade Commission has issued warnings about a surge in stimulus-related scams, with criminals posing as IRS agents via phishing emails and spoofed phone numbers. Legitimate payments will never require recipients to verify personal information or pay upfront fees, a critical detail every senior should memorize. Banks are also on high alert for check-washing schemes targeting paper stimulus mailings, urging customers to opt for direct deposit whenever possible. Behind the scenes, this stimulus package required complex coordination between multiple government agencies. The Social Security Administration had to cross-reference its database of 70 million beneficiaries with IRS tax records to create a verified payment list, a process that took nearly 8 months of behind-the-scenes work. Technical glitches nearly derailed the rollout when outdated COBOL systems at the Treasury Department struggled to process the dual payment structure, requiring emergency updates to avoid delays. For seniors living on fixed incomes, this stimulus could be transformative. Take the hypothetical example of Martha, a 72-year-old widow in Ohio, relying solely on her $1,800 monthly Social Security check. After paying $900 for rent, $400 for medications, and $300 for utilities, she's typically left with just $200 for groceries, a situation forcing her to regularly skip meals. The $6,400 infusion would cover 7 months of her medication costs or nearly a full year of utility bills, providing breathing room she hasn't had in decades. Stories like Martha's explain why AARP has labeled this stimulus the most significant financial relief for older Americans since the Affordable Care Act. However, economists warn of potential inflationary side effects. Injecting billions into the economy could further drive up prices in sectors like healthcare and housing markets where seniors disproportionately spend their income. The Federal Reserve finds itself in a policy bind, balancing the need for immediate relief against its ongoing efforts to cool inflation through interest rate hikes. Some analysts predict the stimulus could add 0.2% to the consumer price index over the next quarter, though others argue that seniors' spending patterns focused on necessities rather than discretionary goods will minimize broader economic impacts. The IRS has also revealed intriguing details about payment prioritization. Recipients aged 80+ will receive their deposits first, followed by those with documented disabilities, then general Social Security retirees. This triage system aims to assist the most vulnerable populations first, though it's sparked debates about fairness among younger seniors. Direct deposit users will see payments labeled IRS IM 2024 in their transaction histories, while paper checks will feature security watermarks and heat-sensitive ink to prevent forgery. Looking ahead, this stimulus could set a precedent for future crisis responses. Legislators are already drafting bills to automate similar payments during declared national emergencies, bypassing congressional gridlock. While the current package doesn't include recurring payments, progressive lawmakers are using its rollout to renew calls for permanent cost of living adjustments tied to senior-specific inflation metrics rather than the standard CPEW formula. As Saturday's deposit date approaches, community organizations are mobilizing to help seniors navigate this windfall. Free financial counseling clinics have popped up in senior centers nationwide, offering guidance on debt payoff strategies and scam avoidance. Food banks report decreased demand as beneficiaries await their payments, a bittersweet indicator of how desperately this relief is needed. For millions, this weekend represents more than just a deposit notification. It's a lifeline, a chance to finally replace broken hearing aids, repair leaky roofs, or simply buy groceries without rationing. The human stories behind these payments are as varied as they are poignant. There's 68-year-old Vietnam veteran Carl in Arizona, who's been rationing his insulin to afford dog food for his service animal. There's retired teacher Gloria in Florida, dipping into her late husband's life insurance fund to cover her grandkids' school supplies. For them, the $6,400 isn't just a number, it's dignity, security, and the difference between surviving and thriving. As the IRS prepares to flip the switch on this historic disbursement, one thing becomes clear: in a nation where 1 in 5 seniors lives below the poverty line, this stimulus isn't merely economic policy, it's a moral reckoning.